Oh, it looks like I am live and I am over here texting, Bobby. That didn't sound like a 30-second countdown to me, but what are we talking about on this hot sheet? I am discussing the minutes from the November FOMC meeting with Jerome Powell and the new residential home sale report just released, as well as this week's mortgage applications. Today is Wednesday, November 27th, 2024. I am Byron Lazine, and the hot sheet starts now. Okay, so if you were wondering, this is an actual live show each and every single morning, live 9:30 on the East Coast, 6:30 on the West Coast. You know the deal in between. This is the hot sheets, the only 24-hour look back on the housing market that exists in real estate media landscape. BAM is disrupting the real estate media landscape. We are the media, as Elon says. That's why we do this every single day. We don't hide in a corner like Mr. Lawrence Yun from NAR and come out of it once a month. We talk every single day that the markets are open, and even the day before Thanksgiving. Happy Thanksgiving, everybody. The markets are open, and we are open, and we are live, and we are ready to go. So happy to be with you guys all. If you're not part of the BAMX community, the Black Friday deal is available. So don't use the code behind me. I guess it's over here, the code behind me. Use the link that Bobby's going to put into the live chat. It'll also be available in the replay description. Use that link. That is the special Black Friday link for BAMX, where you get access to all of the relevant information. We sift through the bullshit for you so that you only need and get what you need, rather. Along with the BAMX platform, you get access to the Zoodealio platform now, which helps get more listings for real estate agents and compete with every single buyer. All right, what agents are competing with is Jerome Powell carving up real estate agents all year like a Thanksgiving turkey. Jerome Powell and the FOMC meeting minutes were released here yesterday, and the Fed officials are seeing interest rate cuts ahead. They're predicting them. They're talking about them, but only gradually will they come, is what the meeting minutes show. Let me give you some of the highlights from the minutes. By the way, the meeting minutes is a 17-page document. They release about that level, that much information at, a few weeks after the last meeting. The last meeting was actually during election week. We're now 3 weeks out of that, and we have the minutes released. These minutes look like this. They're 17 pages. Everybody inside of BAMX knows, why would you read 17 pages when you can let us at BAM sift through the bullshit for you and give you the high-level notes, the stuff that you need for the conversations with your database, with your clients. That's exactly what we've done here. Okay. The rate outlook, further rate cuts are anticipated, but will be gradual depending on inflation sustainability, reaching the 2% target and employment staying strong. That's the mandate they've been talking about all of the last 2.5 years. The probability of another rate cut in December has dropped below 60%. We'll take a look at what it is today in just a minute. But here's what's really important. This is what we carve out of the minutes for you inside of each hot sheet. Show notes, we release these show notes inside of BAMX every single day that we have a show. Obviously, use that Black Friday link if you're not in BAMX today. All right, here's the housing mentions. Page 5, you had the first housing mention. Domestic credit markets, borrowing costs for household and most businesses rose over the intermeeting period, intermeeting between meeting and meeting for the Fed committee period, from already elevated levels, primarily reflecting increases in longer-term Treasury yields. Rates on 30-year fixed conforming residential mortgages rose. That makes Jerome happy that they're rising. Doesn't make any of us in the housing industry happy, as we know what impacts that have. Interest rates on credit cards remain relatively unchanged at near historical highs. Okay. That to me, that interest rates on credit cards remaining relatively unchanged at historical highs is a concern. At what point Thank you, Jason, for the Real World Podcast shout out, which was uploaded yesterday. Those highs on the interest rates on the credit cards are concerning because how long can the consumer sustain that type of pressure? And what's that going to mean for a 2025 economy? We know, referencing back to 3 weeks ago, election, the presidential election, that most citizens in the US feel as though the economy's not working for them. And so, will it turn around in 25? How long will it take for consumers to feel like there is a turnaround happening in their favor? Going to page 6 now of the meeting minute notes. Access to credit in residential mortgage market was little unchanged on balance and continued to depend on borrowers' credit risk attributes. Okay. And so, you know what? The lending standards, he mentions here, or the notes rather mention here, that moderately eased residential lending standards. The standards are still really high. Okay. These are really high standards. In comparison, about 10 times harder to get a loan than it was in the run up before the mortgage crisis. FHFA, by the way, just a little side note, FHFA did announce their new conforming loan limit. For those of you that saw that come out this week, FHFA now conforming loan limit is at 806,000. Let me just find I think it's 806,500. I'm going to get to it here in a second. Here it is. Listen, in the early 1970s, this was 417,000 was the number for like 10 years, by the way. But where's the updated number? I don't know why it brought me to this. I Googled it. I'm getting 806,500 as the new FHFA conforming loan limit. Let me see if I can pull up. Yeah, here it is. Here's the values for 2025. This is just a side diversion here that I'm taking. My apologies, but good information for those. 806,500, which is an increase of $39,950, 5.2% from 2024. Okay. So while standards remain high to get a loan, access to more cash, you could put 3 or 5% down now on this FHFA conforming loan limit. And think about that. An 800. So if you're putting 5% down, you're basically talking about an $850,000 home purchase because you can borrow 806,500. This is quality information for your buyers, for your consumers and customers to know, obviously, that, hey, you just got a $39,950 bump on conforming loan limits, if that impacts you. And of course, if those folks qualify. Okay. Going back here to the hot sheet show notes, again, hot sheet show notes available for you to copy and paste and use in your communications right inside of BAMX. You get access to the credit residential market, little unchanged. Let's move now here to fourth paragraph in page 6. Household credit quality delinquency rates on most residential mortgages were largely unchanged at about their historical low. Okay. That's another one. Listen to this, straight from the Fed to your consumers' ears regarding household credit quality. Delinquency rates on most residential mortgages were largely unchanged in September at about their historical low. Maybe that's just a copy and paste for any buyer who's like, man, my uncle says everybody's about to foreclose. Hey, residential mortgages are at a historic low on delinquency rates. And 4 out of 10 homeowners, by the way, Uncle Teddy, do not have a mortgage. Okay, so where are these home price drops coming from if this is the case, right? This isn't 2007, bud. Household balance sheets remain solid overall. On aggregate, home equity remained high, and delinquencies on mortgage loans continued to be low. That's on page 7. Some participants remarked that although increases in housing service prices remain somewhat elevated, they continue to expect that these increases would slow as more subdued pace of rent increases faced by new tenants would eventually be reflected in housing service prices. Okay. Then final mention was on page 10. Here in the FOMC, this is a 17-page document, so there was only 6 mentions of housing, and these are it. They're short and concise. Among the upside risks to inflation cited by participants were the possibility of sudden disruptions in global supply chains due to geopolitical developments, a larger than anticipated easing in financial conditions, stronger than expected consumption, more persistent shelter prices increases, or sharp rises in insurance charges, health, auto, homes. There you go. Those are the only mentions. Again, the Fed doesn't necessarily care what happens to home prices or the ability for home purchases to take shape, even though much of the economy relies on the housing sector to thrive. And certainly Americans' generational wealth relies on a robust housing market. Jerome Powell and the FOMC, unfortunately, just don't care. The only thing they care about, 2% inflation, arbitrary number made up by, I think, some guy in New Zealand decades ago. And then the maximum employment. We all care about maximum employment, and it appears that we don't get these lower rates, which help the housing market until somehow employment takes a hit. Maybe Elon can go in there and lay off enough government employees to make unemployment go up enough to make interest rates go down enough. Of course, interest rates, as we mentioned yesterday in the hot sheet, go and get the replay here on YouTube or go to Spotify or Apple, wherever you listen for the replay. Interest rates now are being projected to be higher in the 6.5 range next year. It's where most projections are coming in at on the 30-year fix now, as all these projections get updated. And this commentary out of the Fed is also not going to get rates to move down. Okay, when they say they see interest rate cuts ahead, but only gradually. This is what's in the meeting minutes. We'll see what happens in December's meeting. Of course, there's data that can change. They have a tendency to change kind of with the wind as more information comes along. The next FOMC meeting is in 3 weeks. There is, though, now a 66% chance that it'll be a quarter point cut. When the minutes were released yesterday, it was only 60. So this has moved up about 6% since those minutes were released. Still a third of a chance that there will be no cut. Will remain at the 450 to 475 level on the federal target interest rate. Of course, that's according to CME Group, who has been very accurate. And the closer you get to that meeting 3 weeks away, that number becomes more and more accurate. All right, we've got new residential home sale data coming in, new residential sales moving down. You can see the chart here in front of you. Obviously, that chart will be available inside of BAMX. Use the link in the chat or in the description. It's a specific Black Friday link for BAMX, so you get the best price ever of all time in the world for BAMX using the Black Friday link. Here's the numbers. Top line, 610,000 new homes sold. This is a seasonally adjusted annual rate. So October over October for the year there. And then you have median sale prices coming in at 437,300. Right now, new homes for sale, 481,000. The next release will be December 24th, right before the December holiday. Okay. This is this top line number of 610,000 on sales of new single family homes was this is the U.S. Census Bureau and Department of Housing and Urban Development numbers. This is 17.3% below the revised September rate of 738,000, also seasonally adjusted, and 9.4% below October 23 level of 673,000. So listen, as rates move up over the last 30 days, you do see these numbers decline. You'll see housing starts actually decline the more rates go up. Although the projections yesterday suggest that they might go up a little bit as builders have more favor. So we'll continue to take a look at what that will look like. That's your update there on new single family houses sold. These are sales. Okay. So sales taking a little bit of a hit, certainly from where they were just a couple of years ago. Sharpest decrease, though, month over month that we've seen in some time on the new single family home sales. Median price really strong at 437,300, and the average sale price for new homes was 545,800. Months of supply, there's a 9.5-month supply at the current sales rate for new construction homes. That's above the national average, and that's above what a even market for buyers and sellers would be. It is a buyer's market for new homes. There's negotiation opportunities with these builders. An even market would be 6 months, or even in some markets as low as 5 months. So it has swung fully to a buyer's market in those new construction markets. 9.5 months supply for new construction. Moving over to mortgage applications now. Mortgage application data for the week. Even despite interest rates, which have been going up for the last month, the overall number is strong. Comes in at 6.3% from a week earlier. We continue now week over week to see increases, small and obviously coming from low levels going all the way back to 1995 on mortgage applications. But hey, week over week data improving is what we will take. Increase 6.3% is the top line number. That's a 3% bump as well from the previous week. The refinance index decreased 3%. We don't care about that because that means the purchase index went up even more, and it was 12% higher from 1 week earlier and 7% compared with the previous week on the unadjusted. And look at this. Mortgage application purchase data was 52% higher than the same week 1 year ago. I'm just going to let that sit there for a minute. That is an enormous bump up on purchase applications, 52% higher than the same week 1 year ago. Now, I'm going to just guess that last week Thanksgiving was a week earlier. Okay, I'm just going to go out there on a limb and guess. So we'll see what happens. And this was here's your disclaimer. Applications were significantly higher than a year ago by most measures, but it was compared to the week of Thanksgiving 1 week earlier. So 52%, an increase. We've seen multiple increases. We haven't seen anything like 52%. We'll see obviously how that evens out next week as we look at mortgage application data in a Thanksgiving week compared to the week after Thanksgiving of 23. We'll have that data in obviously next week when we take a look at that. The 10-year Treasury is off of the 4.30 number that we saw yesterday to 4.256. 4.256 would be below the projection that we looked at yesterday, which FHFA had us at 4.3 for the entire year. Next year, every quarter, they had the 10-year at 4.3 even. Okay. And now we're sitting today at 4.25. So we will take that. That is that's very good news. I'm sorry. That was Fannie Mae's economic developments, not FHFA. Talking FHFA earlier with the conforming loan limits. A lot of stuff going on right now. 30-year fixed yesterday came in. A lot going on for the day before Thanksgiving. I'm actually kind of a little bit surprised at that. 30-year fixed came in at 6.95 off of the 6.93 day before. So getting under that 7 handle. Bond market seems to like the Treasury pick. Don't know much about them. But if it's going to move market, prices down or 30-year fixed prices down, I am all for that. That means, hey, if we can get some people into government that create a favorable environment for business, I'm all for it. Speaking of favorable environment for business, DOJ knows nothing about that. Also in the news this week for real estate agents here, NAR's $418 million settlement was granted final approval. I think Jason mentioned yesterday's Real Word podcast. We talk about the DOJ statement of interest that they had 2 days before Judge Stephen Bao granted his final approval, which was expected. DOJ tried to throw a wrench in there yesterday on the 26th. He granted his final approval. As of November 14th, more than 490,000 claims have been filed by plaintiff class members. Early projections on payout is about 900 a person. That's going to continue to move down as more claims come in. Attorney fees, obviously, were in the tens and actually hundreds of millions of dollars. when it all shakes out. The DOJ's latest filing urged the court to remind NAR the settlement wouldn't stop future litigation. So that's the wrench in there, and that's what I'm talking about with this aggressive DOJ. But for the meantime, we do have a settlement that is in place, and I guess that's the practice as of August 17th, that you would want to continue, would ignore the DOJ if you're a real estate agent. Their statement of interest is just that, a statement of interest. And, what will the DOJ even look like come, January 21st? I take the NAR president's email that was sent out yesterday to DOJ as nothing more than a middle finger. He says we must remain focused on implementing the practice changes. So DOJ is against these practice changes that were approved by the judge yesterday. The NAR president says move forward with them. I thought Rob Hahn, you can read up more about this on the article on nowbam.com. I thought Rob Hahn buddy over there, Rob, said this really well on X. After posting article on DOJ statement of interest, it occurred to me that brokers might be screwed. They can either A, force agents to get written agreements prior to showings to comply with the settlement, which was approved yesterday, then possibly get sued by the DOJ later for antitrust violations if the DOJ has this type of mindset after January 20th. That remains to be seen, obviously. Or B, force agents not to get written agreements prior to showings to avoid getting sued by the DOJ, which means they are not in compliance with the settlement and lose immunity to civil lawsuits. What to do. I'd not love to be in that position that brokers are in. Agents of change know what to do. You just keep closing the knowledge gap between us and consumers. You keep adding extreme value above and beyond what the agents racing to the bottom are doing. That's what this is all about. The hot sheet is all about being able to access the most relevant information. Here at BAM, we'll filter through the bullshit for you. We'll change the media landscape as we continue to move forward as a community. Real estate media is broken. We are helping all of us together fix that, give you the relevant information at your fingertips. And for the articles, podcasts, and shows like this, absolutely no paywall. But for the implementation of the how-to, join us in BAMX and get access to it all so that you can use it in your business immediately when it's fresh and relevant. Use the link, the Black Friday link, to get, I think the Black Friday deal is 40% off of the annual BAMX subscription. So that is just an absolute bonkers deal. Thank you to so many of you guys that are in BAMX right now. We're building something special, we believe, and I'm hearing so many positive remarks from you guys, and I really appreciate those testimonials and all of those messages that you share with me about your experience inside of BAMX. Use the Black Friday link down below to get the best deal, obviously, of the year on BAMX. Happy Thanksgiving to everybody. I'm thankful. We've been now doing this hot sheet for almost 2 years. Thankful to do it with you guys each and every single day. Again, have a great Thanksgiving. And until, I guess, Monday, of course, toodaloo.